Hey everyone, I am super excited to have with us a very, very special guest on the Founder Storiez podcast. Today we have somebody that I have admired from afar for a very long time. And I'm very excited that I finally got to meet him and get to know him a bit and have him as a guest on this podcast. Today, it's an absolute honor to have Aaron Rosenson, who is a co-founder of a company called Aption.
Aption, yeah.
Aption, Aption.
Yes.
And Aaron is a very, very special man, which we're going to get into because we're going to hear all about his story, about his professional life. But what I'm more excited about is not about his professional life, but about his personal life, to learn who Aaron is and what makes Aaron Aaron and how he shows up every single day to be the best version of himself possible. Aaron has had an incredible career. He's worked at some amazing venture capital funds like Insight and Olive Partners. And currently, he's jumped from the dark side to the bright side, from a VC to an operator. And we'll learn all about that too. So Aaron, thank you so much for joining us.
Thanks for having me, Ephraim. It's been great to getting to know you recently, and I'm a little bit red from all that adulation. I'm not sure I can live up to all that, but pleasure to be here, and thanks for taking the time.
You're welcome. It's an absolute honor. And I have to tell you, I'll be straight up and honest. You know, I think I've been following your career since like you joined Olive, which was probably around like 7-8 years ago. Like when you first joined them, and you were 26 years old. And, you know, I think we're the same age. And I remember when you joined Olive and I saw the news, 26-year-old makes the GP partner at Olive. And I'm like, man, what am I doing wrong with my life that at 26 years old, I'm not the partner yet at a venture capital fund?
It was a weird and specific situation. So I wouldn't go that far. I was, it was God's will. I was in the right place in the right time, and it was a wonderful time being there.
So I want to ask you, what are some of the, I guess, crucial moments in your life, or some challenging moments throughout your life and your career that you overcame, and what are the lessons that you learned in hindsight that you grew the most from?
A few things that jump out to me immediately is, I guess, living with. I became in my personal practice as a sort of a halakhically legalistic, I guess, traditionally observant Jewish person. That was something I adopted with, I guess, more focus or intensity after having a great background from my family upbringing towards when I was around 2021. And I think the contrast between what I wanted to do aspirationally, idealistically, and sort of my personal spiritual practice, something that stemmed from just a few personal experience I had, some personal growth, trip to Eastern Europe I had taken. That was sort of in big contrast to a lot of created habits, patterns, ways I was living there that were not conducive to what I ideally want to be doing, and living with that tension, that cognitive dissonance of being at odds with the version of myself I wanted to be doing day to day, but then subsequently, when I was living that life, having it not be comfortable and easy and quite as flowing as someone who had sort of grown up in that system, or who didn't have necessarily other things to be doing with their time and energies. That was a tension that was kind of very hard for me. And honestly, the answer and way through it was just to kind of keep going one day at a time, one step at a time, and have clean answers to it. I guess another I think particularly challenging thing for me that stands out to mind is that within sort of my first few years, when I was at Olive, there was a particular company where we had to do a very sensitive executive replacement very early on, and it was early on in the investment. It was early on in my career as an investor in Israel. The person in question, we were confident in our decision to do the replacement for a variety of commercial and non-commercial reasons. And it was, let's say, very, very tense, very personal, and felt sort of very risky. And at this time, we just had a second kid. There were some, I guess, health complications we were dealing with, a variety of health complications we were dealing with personally as a family. We were alone in Israel at the time, from a communal perspective, from a familial perspective. and juggling all that and needing to be who I need to be as a spouse, as a dad, as a partner, as a community member was definitely really, really challenging. So there are many more that stand out to me, but those are two.
Wow. I think particularly the last one, I think really hits home because, there's so many aspects of what you mentioned in that specific thing. And I think one thing that could summarize the feeling that you were feeling was, I could, at least I would know one feeling I feel like that came out of the last one was the feeling of loneliness, of being alone. How'd you
Yeah.
combat that?
I think the feeling of loneliness is the feeling of aloneness is a feeling that I've grown used to having for a while, and whether that aloneness dips into loneliness or not um, is can be dependent on so many external factors. I think that historically, I've been able to run on a dirty fuel that I'm not proud of, which is just cortisol or just anxiety or just the need to survive. I definitely, since my upbringing and knowing family history as someone who both sides of the family, barely survived, whether the Holocaust or various pogroms, some didn't survive, or also just my family's background, where my parents both grew up in sort of lower middle class or lower class environments, facing various economic challenges, sort of the grinding through and just making it work because you're aware of what alternatives can be and they're really bad, has been something I've leaned on. But that doesn't make for the best possible living because ultimately life is full of these challenges and tensions, and living authentically usually involves doing things that other people are doing, not to be different, but because it's just what must be done, um, as, as a manifestation of one's autonomy and personhood and what they believe is right. And so, um, lonesomeness, common loneliness, I think, um, is I think comes mainly from the disappointment. If we're either understimulated socially, if we don't feel like we have partners, whether that's friendships, romantic partners, business partners who can support us in the way we need, or whether there's just an expectation that isn't met that we were going to get some level of support and we're not going to have it. I think that's when it can trend into loneliness. But I think embracing aloneness and embracing the peacefulness and that void and being able to hear the inaudible voices and direction that come from that lonesomeness is tremendous. And then with three little kids these days, I don't get enough of it. Thank God, I love my kids and my family. But yeah,
I think also one of the I was actually reading this morning. There's some tweet that was going around and somehow made it onto my WhatsApp, being shared all around. And it talks about from Brian Chesky from the CEO of Airbnb, was talking about how as the company got more successful, the more lonelier he got. Because there's only a certain amount of people on the top, and there's only a certain amount of people that is able to be, extremely vulnerable and open with. And he writes over there that, when the company went public, he felt like, we have this $100 billion valuation. And, from now on, everything will be okay. And when he woke up the next morning, he had the same feeling as the day before and the previous day before that, that feeling of loneliness. And, and I truly think that our biggest pandemic facing the world at large is the pandemic of loneliness, where people feel lonely. And I think, specifically within our own ecosystem, which is founders and startups and venture capital, I think we see it the most, specifically with founders. How even though they could have co-founders, they could have a family and everything, but they feel internally lonely.
yeah, and I think that one of the I think a big part of it too, and another side to that story that you spoke to is that I think a lot of people, especially in the tech ecosystem, are seeking a lot of fulfillment and validation from the work that they're doing. And that's a fantastic thing. A lot of people's work is affecting countless lives in immeasurably positive ways. At the same time, there is an inauthenticness, inauthenticity um, to some of these business relationships that when you're spending 40 to 70 hours a week in them can blind someone to the really rejuvenative, nourishing, truthful, relationships that are important for people as social creatures. I mean, I witnessed myself, like, when I suddenly became from a junior person at Insight Partners to a GP at Olive, and subsequently when I separated with Olive, I saw how the way people interacted with me, the attention I got changed. And by all accounts and measures, when you're in a conversation, it's that people are on point with what they're choosing to smile at, laugh at. There isn't obvious um, artificialness in the interaction. But the thing is that people want money and power, and the more people are attached to those things, the more attractive they are as a confidant, as a friend, as an advisor, and um, and within that dynamic, when you get to the point that you're, Brian Chesky, people are not having relationships with you for the most part for authentic reasons anymore. And that started a lot before he was $100 billion company or an IPO company. And that contributes to profound loneliness if you're spending 50, 60, 70 hours of work and you don't have nourishing spiritual places to draw from, whether that's religion or personal practices or just health and wellness or family or close relationships. And so, and especially when you're looking for the ego validation, social validation of a very sort of envy-driven industry, and putting too much stock in these 8 or 11 years of relationships you've had because everyone's nice to you and everyone's talking to you, but it doesn't change that so much of it is by what you can do for them, even if there's real humanness and real relationship that's underlying all of it, which there is. It's complicated. It's not black and white.
Wow. So do you think people treated you differently, or did you see how people treated you differently, from when you jumped, let's say, from a junior partner inside to a GP at Olive, and while you were at Olive, and I guess subsequently when you left, you feel like people looked at you and treated you differently?
Oh yeah. It was so vivifying as well, because it drives home just what's true and what's not true. Just the level of interest and coverage people showed me when I became a partner at Olive, and the reversal of that too, even from people who shouldn't have, and who there should have been more trust. And that shouldn't have, because I'm an important person. I have good opinions, but just there's a certain understanding, and it was very remarkable how a lot of people shifted. Now, actually, throughout that, and now that Aption is becoming a very interesting company, I'm seeing those same people come back too. It's I'm not going to say a thing. It's the way of the world. But I think what's actually interesting is throughout all of it is that the people who've been most helpful to me in Aption have actually not been. Actually, there've been some great CEOs I've worked with who've been really, really helpful to me. But a lot of the people who've been helpful to me are people who were just random people who I treated very nicely when I was in a position of having more obvious power and influence, and they were not, and I didn't need to. And it's actually funny because the people at the time were completely important, but there wasn't an obvious business monetary reason that I should have spent time helping them. It was like a small thing I did then. But the amount of help that we've gotten as a business from people like this who kind of climb out the woodwork, who I haven't spoken to in 7 years, and versus people who there is a more substantive working relationship, is really noteworthy to me. And again, it's just very humbling and an eye-opening and a good reminder of just the limits of true vivifying relationships within the business world.
Right. I think at the end of the day, there's a few things that come to mind. The one, I think the most important thing is that people at the end of the day leave a meeting or leave an interaction, and what they remember is how you made them feel. If you treated them like a mensch, if you were kind to them, if you went out of the way for them. And I think that, it's not about, in life in general, end of the day, we come from the earth and we're going back to the earth, right? And just because, titles and positions is just a job. And those things come and go constantly. One day you're on top, the next day you're on bottom. And at the end of the day, it's about how we look at every single individual person and seeing them as a, sort of like a piece of God. And it's about how we treat them and how we make the world a better place. And everything else is secondary, absolutely secondary. So like everything you're talking about, like resonates so much about this. I guess the other thing would be like, how did you not, how did you personally, unless you did, not buy into all this? Because if you look at it, you're like, you have to think of it from your perspective. You're this 26-year-old kid. You became the GP of this, at that point in time, with a $140 million fund. You have Eco Partnership. You were coming from Insight, which has a few hundred, investors, and all of a sudden you're just 3 investors. And everyone's showering upon you respect and everything. And then you were there for all the subsequent years post that. How did you not buy into all of that and stay, or unless you did?
No, I mean, it was a really unusually positive development for me and my family, both. I mean, there's sacrifices I made taking that role. There's other things at the time, but at the same time, to do that job and to move to Israel was tremendous. And honestly, for me, a big part was just that I knew that it was God who was putting into my life, and that my abilities weren't mine. I'm just a wielder and kind of the rider on top of the set of abilities I have. I'm supposed to do something with that's positive for the world that's around me, and it just is a higher level of responsibility. And I knew that it was not inevitable that I would get a job like that. I did think that I was qualified, and I think my investment track record has, and God willing, will continue to speak for that. But I just appreciate it as in right place and right time, and that the meanness of getting the job wasn't really in me. It was just sort of this: I am this set of capabilities I have. I just need to wield that appropriately, and so. So that was it for me. I mean, just wanted to kind of make the most opportunities, stay focused on doing good work, and just not take myself too seriously, because there's just a ton of ego and bad behavior and grandiosity within VC, and absolute power corrupts absolutely, but it's a sliding spectrum. Less than absolute power just tends to corrupt across a really broad base of wielders on it, and just didn't want to be, that guy. Just it was always amazing to me just how rude or dismissive or arrogant or conflict oriented people can be unnecessarily so. And whereas to your point, we're kind of floating through space and time together. Occasionally our paths intersect. Like it's just trying to make the best of it. It's it's pretty brutal out there. It can be beautiful as well, but let's try to make the best of it. And we're here for commercial reasons, but let's it doesn't mean be weak in business, but different posture, different orientation. So. That's all. But to be honest, it does affect people over time, and that in terms of sort of the I think that it's subtle things. I think that when it came to sort of, and COVID was also a big social reoriented around a lot of things as well. But I'd say that when it comes to the level of focus and balance one has in their career versus their family versus their personal spiritual pursuits, in my case, Torah learning, personal development, character development, prayer, things like that, wellness. I just do think that over time, that a job that's touches a lot of things and has a lot of upsides to it and other things can increasingly take on a bigger role in your life, especially if you aren't really good at compartmentalizing and managing stress, something that I'm okay at, but not necessarily great. And furthermore, in this weird porous world where we haven't yet solved for, as a VC, you want to be there for your founders all the time. And so when you're on WhatsApp all the time and on email all the time and moving quickly and you want to compete and you want to show respect for an opportunity, it can lead to a lot of stress and a lot of burnout as well. So I guess where I was going with that is, just takes a lot of focus, and there wasn't a lot of time to dwell on too much of it. But over time, you do. I think if I had to look back at my 6-7 years at Olive, I think that my slide towards how much I was focusing on my job versus other things in my life, I think I could have tilted the balance a little more. That being said, I'm really proud of who I am as a person and as a family man, and a bunch of other things as well. There's always growing that we can all do, but I wouldn't pat myself on the back too much. Wow, I was so immune and numb to everything. I just I'm human.
I have so many questions on that, and we're gonna get there. But I just want to stay on your VC career for a second, because I know many people listening to this are going to ask themselves, what are the things that you did, that Aaron did, that made him a good VC, and got him to the, to sort of quote unquote to the highest, rung of VC ladder at such a young age. And people are going to ask themselves, like, what did Aaron do right? Or what are the things that he did? What were his practice shots that he did that I could potentially learn from and insert into my own career? So what were those things?
I can't give a bunch of past. What I would say is that I was incredibly fortunate, and it was, with the grace of God that I got into it. I mean, I know my specialty is software investing, like technical software investing. I can barely restart a computer. I'm incredibly non-technical. It doesn't come to me naturally. And in many ways, that ended up being a bit of a gift for me. I think that what I always really liked actually was English literature. I like statistics as well. And actually, in many ways, I feel like statistics is truly a humanities class disguised as a math class. But I think that what I really liked within literature is the complex tapestry of themes, things that invoke patterns, humanity, the inarticulable grayness of what it is to be a person. And by doing that in this intricate way, they get to truths that transcend verbiage, because fundamentally articulation brings down matters that are inarticulable and that are more get at the essence when they are unspoken. But by weaving that together, you get a sense of truth and unity that's just very remarkable. And so books and then literature in that sense have always spoken to me, as was speech and writing and language, and actually was a big platform for me when I got involved in Gomorrah learning eventually, after having a relatively good educational background, just in kind of the horrifying like depth and beauty and integrity of that system. It was really my background in English literature and studies in general that made me really appreciate the tradition of Torah Judaism, and just the horrifying substance and quality of that content too. But taking together all of that and bringing together these different modalities of like language and communication, tying together big intricate themes into rules and patterns, was something I always enjoyed doing, with the coupling statistics, understanding how people in this behavior manifested themselves numerically in reality. And so when I came to, and that was kind of my orientation, but where I was really lucky is that I had a guy in my fraternity who was working at Insight Partners, and I was at Wharton for undergrad, which is one of the few places that you could break into VC right out of the bat. It was early 2010s. Insight Partners wasn't a known entity yet. There were only a few people hiring undergrads. They were just going to a few schools. And I was kind of looking around at different jobs, and, in Wharton, there's like a lot of like baking and all this sort of stuff. And I'd come out of like a big public high school, all these guys in prep school knew how to do like hotkeys and Excel their freshman year. I was just way outgunned from all the guys who knew how to do this stuff. And I was kind of looking around, and I was also looking at the cost of raising a Jewish family and affordability in general, and saying, I need to make a move and start making some money here. I didn't have, parents who didn't fall back on this. And then I heard about this job. It's like, okay, it's similar. It's a good starting pay. And instead of being a spreadsheet for 6 to 8 hours, you're talking to CEOs and founders of businesses. And I said, oh, that sounds fantastic, because that's interesting. It's a lot better than alternatives. And so it ended up being Insight Partners. I got started there, and I was just so blessed to I got my 10,000 hours from just really an institution that I have the utmost respect for. And the beauty of being an Insight Partners is not only do you get to speak to thousands of businesses and see thousands of businesses, but you get to see the low-level analysis. You get to do this sort of deep data cuts and understand how these great investors are thinking about businesses. The businesses are late stage enough that you can wait a few years, see the feedback loops, what assumptions worked, what assumptions did not work out, and why. And the ability to, and like unlike an early stage venture where you can take a bet and not know for 9 years, the ability to have tight feedback loops and a very thoughtful data-driven process that had an art element to it too, but also there's a lot of data you could work with, just created this really tight coupled learning experience that one could have as a venture investor, and really have a point of view on like the present value of a business based on an opinion on things, versus just, I think this is going to be a sociological movement that'll be really compelling, even more than people expect. And that, as a value-driven investor and someone always like kind of value-driven investing books, and that spoke to me. And so with that tool set, I went and I started sourcing deals for Insight, and I ended up sourcing them a bunch of really great companies. One of them was a business called Cloud that would eventually become Docker, which is one of the most important infrastructure tools in kind of microservices and cloud computing probably in the past decade. And a big part of that was that even though it was a very technical tool, just the idea of being able to take these monolithic applications, break them down into little subcomponents that could be actively managed and orchestrated together, just made a lot of sense. And from a human behavior perspective, from a technical perspective, from where the world was going to sort of a more multi-tenant software native environment, how software is being consumed. And in many ways, it was that I mean, I wasn't the only person to see that. Benchmark did the seed Series A, even though the company had kind of really stalled out back when it was Cloud, and I was tracking it back then. But it was being removed from that technical side of things, that and the training I've been getting at Insight that was enabling me to see things like that. But then also subsequently businesses like HelloFresh, which was at one point worth 10 billion when it IPO'd, and Germany's worth a bit less now. And then companies like Gainsight, Moat, WalkMe, which got acquired for $1 billion plus. All that came from learning enterprise software investors, investing from really great investors, and bringing to bear those methodologies with my own just love of kind of pattern matching and weaving together different tapestries of things. So I'm not sure how applicable it is. I would say that if you can break into growth stage investing, the kind of training you get at a data-driven growth stage investor at a place like Insight or similar places like that it's invaluable to anyone who's going to have a career in VC, because it's just, how do you value and understand a business when it's seed or Series A if you don't have the fully data-driven point of view on how to think about risks and rewards and opportunities and pitfalls of a business at Series C, D, and F, when it's really a really different beast to analyze and think through businesses like that. And it just allowed me to be a much more complete investor. And then when I was able to move to the seed and Series A, after I've been doing that and been doing also some like software buyouts and M&A stuff as well, I just felt very complete as like a steward of capital. And so that was really useful and lucky.
I like a few points over there you mentioned. Like a fact you mentioned, beginning your education, how it wasn't necessarily a business education. You were interested in everything like literature, you're interested in statistics and everything else. And I always think, and I always go back to this, that to become a good investor, or in general, it's about, I guess, a lot of times the general knowledge you have. Last week we published an episode with Adam Fisher from Bessemer, who I think is by far one of the best investors in Israel, by far. Definitely top three for sure. And he told me that he's like, Ephraim, I don't read any business books. I don't read them. I have never read them, and I never will read them. He's like, I get more inspiration and innovation from reading literature, philosophy, history. I get more innovation and inspiration from them that I'm able to bring that back into my venture career, into investing, into helping my startups. And that's where I find the most inspiration. He's like, a business book is a very one-sided thing from the author's point of view. It's not going to give you a generic point of view. It's not going to help you, because every single situation in business is different and is specific. And so he was saying, and I absolutely agree with that, because, investing is a very, unless you're going specific to a specific vertical, but it's a very general, investing in general is very generalized. Every situation is its own unique situation. You could get, inspiration and experience from someone else that's been through that situation and hear their opinion. But at the end of the day, that advice might not necessarily apply to your situation. Excuse me. So I love that. The other thing you mentioned a few times is how spirituality and Torah keeps you balanced and gives you guidance. And I want to tap into that a little bit, like how spirituality enhances your professional life and keeps you balanced in your career and in general life.
Sometimes religion is keeping me balanced, and sometimes it can feel like more of a burden. It can fluctuate at times. I mean, fundamentally, I view a lot of the religious stuff I'm doing as a moral prerogative. It doesn't mean that it's rote, but I see a lot of it as a system of things that I fundamentally believe in after a lot of experience, intuition, analysis, and I'm committed to it. And so that includes doing things like praying a morning prayer service when I only gotten a certain number of hours of sleep, and that doesn't involve getting up earlier. And so sometimes it doesn't always feel it's quite spiritual, but ultimately at the same time, it's easy to associate the word spirituality with inspiration, and in reality, so much of life is about living when there isn't constant inspiration, and about finding peace and flow and motion and growth within patterns of being. And so I think that where so my sense of self when I'm doing the wrong thing is just table stakes for me to be a happy, healthy person, being, how I treat others, and also what I do with my, my abilities as they are. And so that's like like exercising, that's like table stakes for me to feel okay versus necessarily being a proactive driving forward. But where it's really helpful is that when there are things in my life that are just sacrosanct outside of work, whether that's when that's Shabbat, when that's teaching Torah to my children, making sure my children grow up to be kind, conscientious, God-fearing people, whether that's my own growth in my own religious observance and practice and trying to add to that, whether that's trying to take a moment for contemplative reflection, having those as a solid framework as my life that's established and not part of my work is just allows me to be a more balanced person, and allows me to be less exhausted. The work has a way, especially in the tech industry, of being very, very consuming, and it's very easy for one's identity to drift into being too comprised of what they're doing for a living, and that's been a good buffer for me. I think moments of inspiration, though, come and go, and spirituality wanes and waxes.
You have to have that strong foundation, that framework, and that from there, everything else gets spread out.
Yeah, I think having committing to a practice is the table stakes, because motivation, inspiration is fleeting, and is ultimately an impetus to commit to lasting changes, not a sign that you're doing or not doing the right thing. And like what we're doing, at Aption, for instance, I think is if it gets normalized, which is on the way to, hopefully, is going to help tens of thousands of working families, similar to what John Bogle did at Vanguard with ETS for the middle class in the 20th century. That doesn't get me jumping out of bed every morning to do my job, but if you believe in the principles, and there's moments of inspiration that are just wordlessly vivifying and authentic to oneself, then one has to kind of remember those moments and carry forward the subsequent practices, and that's spirituality. And with enough embracing of a lifestyle like that, hopefully those moments of inspiration become more frequent, and maybe even meld into a ability to be present-minded that is beyond needing inspiration. It's just a present-minded Nirvana-esque experience. Definitely not what I'm living. I'd like to get there one day, if such a thing is possible.
Yeah. And, we can't wait for the inspiration to happen. It's the same thing with work. We can't wait to get motivated and then go ahead and work. We have to do the work, and then we get motivated. And I think with inspiration is the same exact thing. Because inspiration, like you said, is fleeting. Like you could be sitting around people, you could hear a speech, you could get inspired. But at the end of the day, the real work starts when you go back home, what you do with that inspiration. So if you let that inspiration be a fleeting moment and just get inspired and do anything with it, then it's wasteless. But if you go home and you take that inspiration and you apply it to something, then that inspiration can continue on. Which, hence brings me to our next topic, which we want to cover, is... you're currently now the co-founder of a brand new company, Aption. And, what was not working before Aption that you had to go ahead and create Aption?
Yeah, I'm very much an unwilling founder of a business. Aption was, it was nothing, I had seen an up close and personal seat at so many board tables and late night founder discussions, and seeing the stress that these folks lived under, and what they were missing out in their family lives, what they were missing out in having a normal existence to build a business. And it's not like they had much choice. I mean, in this day and age, without an inheritance event or a trust fund, most people are not going to be able to buy houses or apartments unless they have an equity outcome. And that's not a good or sustainable situation. And so people a lot of times talk about all the entrepreneurship in Israel. Say, well, there isn't this easy middle class path in Israel where someone's going and making low mid six figures and it climbs over time really easily. It's broadly available to lots of people. Not like that's super broadly available in the U.S. either. But it's desperation. It's like they're always saying, talking about, most people live lives of quiet desperation, and just seeing this ecosystem rife with desperation, and people just trading their time with their family and trading their physical and mental health to try to make a living, while the whole system, let me put it this way, they're doing this and they're being forced into a system that mathematically is the opposite of serving them well. What we've seen over time, the data shown time and time again in the public markets, for instance, is that a low-cost index fund with low cost of fees outperforms active management, no matter how smart and charismatic and loudmouth the hedge fund manager may be. And that's led to people don't know when the next big compounding companies are going to be. Even within the S&P 500, only 10% of those companies are going to be growth companies. A whopping 70% of them are going to have negative or neutral returns. And these are healthy, dynamic public businesses that are in the public markets because they can be growth assets. And the companies in the private markets are substantially riskier. And 4-year options used to be because a company would IPO or go bust in 5 or 6 years. Now we have companies that are sitting private for 13, 15, 17 years. And we tell working moms and dads and just individuals that, try to build wealth with these companies. By the way, you're going to not have any training as a professional investor. 80 or 90% of venture-backed equity is going to be worthless. You're going to be misaligned with the founders who are going to cut themselves maybe a sweetheart deal on the exit that you won't be a part of. And even if you're a founder, you're going to be misaligned with your board, who has a whole different set of incentives going to push you towards more risk-taking behavior while they get to enjoy diversification and a stream of multiple layers of management fees. And we tell people, try to make a living this way. You're going to be illiquid for 14 years, no ability to diversify that. And if you're lucky enough to be part of a great company, now you're going to live with that company being 93 or 87% of your family's net worth for 7 years, 11 years. And that's the exact opposite of what all the data says is the right way to protect and grow wealth, which is a diversified approach that, yes, can have risk and can have personal autonomy and preference in where you take things, but is one that does not put you in a single business for 95% of your net worth for 14 years and say, live the dream. Anything else is like traitorous to the mission, which is a culture that's pushed by people who don't need to have that same level of exposure. So seeing that up close was someone, again, who comes from middle-class background and whose my dad's dad lost everything in his small business because the insurance check wasn't mailed in some month. His business got burned down in the Chicago race riots. I know many other such stories. He was never the same after that. It just made me very sensitive to what these people go through versus my position as a VC, how privileged it is to get diversification and the management fees, and also just seeing within the VC industry the level of callousness or insensitivity shown by many VCs towards founders in spite of that. I mean, look, it's business, and VCs and founders are not always aligned, but there's always things that kind of rub me the wrong way about how I saw a lot of things in the industry working. And when I was approached by my current co-founder, I was planning on continuing to do VC after I separated with Olive. There's a few different things I was working. I was very excited about. But I was approached by my co-founder who had built a solution that allowed people to take these illiquid assets and put them into similarly promising other assets to get diversification sooner and faster, more certain liquidity, less downside risks. The idea of normalizing that and with someone who's actually capable of building such a complex structure, it just felt like this is what I'm supposed to be doing with my time. Like I felt as though I could really make a contribution that would help a lot of people, and that I'm supposed to do this. And I felt sort of the guiding hand of God and at that moment that I'm supposed to work on this. And it's not a nonprofit, but yeah, that's my long-winded answer.
How does it feel to be now on the operations side? Was it like a learning curve from becoming a VC into to joining to being on the operating side?
It's way different. It's way harder. Something I always knew as a VC, but when you're actually as a founder, you really love it. Way harder, way more to do, way more to accomplish. the posture that you have towards the world is completely different as well. You're constantly trying to like climb out of the pit and get the thing moving down the tracks, and people's posture back to you, unless they're especially loyal or believe in the long-term relationship, reflects that. It's a total grind. It's very humbling. You really try to push something up a track, and no one around is really there to help you for free. And it's again, it's way I way more enjoy being a VC. It's way more fun being a VC. I'd much rather be doing VC, but I just feel that there are thousands of working families that need it, and if I don't do this, I'm with my partner alone and our other later joining co-founder Avi. I don't see who else is going to solve this in the same way, and I don't feel free to desist from doing the work. So here we are. But as things work more and more, it's getting more and more fun.
I love how, if I had to summarize it, I would have put your group of co-founders as a mission-driven founders. And the mission essentially you guys are trying to solve for is, at the end of the day, to help middle-class families receive more income. Like, you're driven by a mission. Do you have any examples or stories of how so far it's worked and how you were successful so far in your mission?
Yeah, I mean, I'd say you are correct in the mission that we want to make the tech ecosystem a safer place for people and families to build and protect their wealth. And the way that's going to happen is by allowing everyone to be realizing, on average, a much higher portion of their paper wealth than they're realizing now. And the beauty is that, as an aside, for somebody, who would have had a $30 million or a $4 million outcome, whose outcome is now 3.7 million or 37 million, the diminishing utility is quite substantial at those levels, as in to go from a $19 million or $17 million outcome because you pooled 5 or 10% of your position is not going to change your life very much at all. But to go from having nothing to making $200,000 on an equity position is enormous for a family. It could be the difference between moving to a school district, putting a down payment on a house, having the ability to take time off to deal with a kid who had a medical problem when you want to be going and leave the workforce for a year or two. And the way it's manifested is that we've paid out exits. I mean, we had an executive from HiBob in one of our pools, HiBob at a secondary, and a bunch of folks, and Hermetic was in one of our pools. They got acquired by Tenable. So we had a bunch of, and these weren't even founder pools, which we have some tremendous first-class founders in these pools with much larger positions. But we had a bunch of folks who've never had an exit in their life, within 100 days of joining, get a 5-figure check from the exit of a company they never worked at. We have texts from people saying, "Oh my God, like I've never had an exit before. I can't imagine. I can't believe this is working this way." And for a lot of these folks, this is a substantial part of their yearly salary, in the form of exit. Is that going to change their life? No, but they have the rest of their pool left, so they have their salary. And that's what it's about fundamentally, which is that we have this ecosystem where people are getting a grant that's worth, $150,000, $500,000, $2 million with vesting on paper. And most people are realizing either all of it times 3 or none of it. And we're making a world in which everyone's going to have the right to realize 5 or 10 or 15% of that. And that is going to be something in this world of affordability crisis, and in which inflation is a lot worse than it looks, and the problems that we're dealing in the global financial system are a lot worse than they look. I think, beyond the scope of this conversation, that's something that's really good for nearly everyone, and not that bad for the people. And the people who made a little less because they put a little bit into the pool, they get sooner and faster, more frequent liquidity. Maybe they're $50 million because they got $500,000 of it 9 years earlier. They could do something big in their life that affected their kids positively forever. And just they got an insurance policy as well. So that's my answer to that.
It's so incredible to see the passion and how you talk about it. Like when you're speaking about it, you're speaking very, very fast, which I love. Absolutely. Coming from New York, I love when people talk fast. But your pitch rises. You're talking about it very fast. Your face lights up. It's just amazing. But just for practicality, like, for simple people like myself, so I want to understand it. So you're telling me essentially that, I'm an executive at company X, or I work at company X, and I could go to 5 of my other friends that work at 5 different other startups, and we could come together and put our options into a pool, correct?
to be more specific and also more expansive, you're correct. So let's say you work at a Series D startup, and the value of your options at the last round is $500,000. We're giving you another way to build and protect your wealth. So you should take salary. You should sell some secondary for cash, maybe at some point if you can. You should believe in your company and go big. But we're also giving you the ability in a way that doesn't run afoul and the approvals from your board and your company, that doesn't screw up anything with tax law, securities laws, tax neutral. We're giving you the ability to go and take part of that economics and trade it for other similarly promising positions. Now, this is in a way infrastructure as a service. So it can be you going and doing swapping $100,000 of your economics with a buddy that you know and you trust each other, and you get together over a beer and you do it. We can use your last round valuation. We can help you with a custom valuation, whatever you want. It can be people in your broader network you know. It can be people that we bring to you, companies that we feel are similarly promising. And fundamentally, you can build your own pool, and we also have programmatic options. So we had a lot of people who came to us and said, look, I know I should be doing something like this. Like, I don't have a point of view on like what other businesses I want to get into bed with. You know, okay, these guys just raised a round from Battery Bus. Like, it doesn't mean anything to me. I don't know. And so we've created a number of programmatic pools as well. And so what we see a lot of people do is they're doing a few custom pools with, friends or people they know. They're doing a few custom pools with, we have an early growth pool, a growth pool, a pre-IPO pool. So those pools are voting members. If they get accepted into those pools, they can join them if they're at a company that seems promising enough to the pool members. And then we also have programmatic pools as well for companies that raised recently or for companies that exhibit a certain set of criteria. That's a big data science effort for us as well. And so, we advise people to do multiple pools with multiple strategies for a portion, and usually a minority portion, of their overall holding. Because mathematically, that leads to them to be safer and have less downside without giving up on meaningful upside, and probably having actually more outcomes and sooner outcomes versus if they had not used us.
And it makes total sense. Total sense. Like, it's almost so simple that like you think like, why hasn't anyone else done it before? Because
people have been trying for a long time. We're not the first and we're not the 50th to think of this idea of equity pooling. Aptioning is what it's called now, based on the unique, and Aption is the unique synthetic derivative structure that we've created to solve this problem, the 14 or 140, depending on who you ask, pitfalls that come with it. And Aptioning is like the verb of using this infrastructure to diversify and better secure your wealth and your family. But it's just very, very, very difficult to do. There's the company articles, the share plan agreement, the non-lien provisions, board approvals, the right of first refusal, tax authority, securities law, regulatory law, tax law. There's a lot of ways you can screw it up. And my co-founder alone is brilliant. And he's one of the only people I know who could figure it out. And if he told me, hey, Aaron, I figured it out, I'd actually believe. I've been on like over a dozen boards. I know how hard this is to solve. And that's what people have done in the past. People have had certain solutions that work just for founders at company genesis, or certain solutions that use kind of shady forward contracts or other just structures that are not as clean and as secure as ours for a very small segment of very well-known late-stage companies, which already have kind of unofficial liquidity solutions as well. SpaceX and Gmail are not public, but you can kind of get liquidity probably. Whereas no one's really solved this sort of broad-based solution and also solved for doing the solution in a cashless format. Because people think about secondary markets, the value of being for liquidity. A big part of the secondary markets is about exposure management. But just no one's built a solution yet that can manage exposure without delivering you liquidity that you could subsequently allocate elsewhere. And so actually, we raised an unannounced round, and all of our investors in our round are either people who had deep knowledge of derivatives and appreciated what we were doing here, or people who had been VCs who had been founders themselves and either tried to do this or wanted to do this for others or wanted to do this for their funds because they were caring, thought-leading VCs and they wanted to do it for the founders of their funds. And they saw that it was so freaking hard to do, and that this is really like an infrastructure solution, similar to a developer tool or an infrastructure as a service solution where, yes, it's replicable, but it's not easy, and there's the technical challenge to solving it.
Yeah, I mean, that makes so much sense. And at the same time, it's like, people are essentially given false promises, right? And, a lot of, let's say, employees or even founders, a lot of it is paper wealth, For example, You have a company right now in Israel that's being acquired, that was meant to be acquired by NVIDIA. And all of a sudden you're hearing reports how, the acquisition might not go through, a little bit, harder to pass through regulation than necessary. And then you had all these people that are working there for multiple years that think that they're worth X amount of money based upon this acquisition. And all of a sudden they're not worth that amount of money. I mean, hopefully they didn't spend any money yet based upon that. But we see a lot of these types of cases where, you have to have that incentive of options and everything else in order to inspire people, to encourage people, so people could feel like they're part of something bigger and they have an owner equity stake. But at the same time, people don't realize that most times, 90% of the times, those equity stakes go to nothing.
You see, you're right in your observation, and hopefully for all the workers and investors that run AI, that acquisition goes through. But it's in many ways the problem is a bit of the opposite. I think sometimes, in that a lot of investors a lot of employees count the options being worth zero because I don't know, it's not be worth anything. But for the founders, they're giving away bits of their company, and it shouldn't be valued at zero. And so what we're offering here is an infrastructure. First of all, a Monte Carlo analysis will show that the vast majority of people who use our solution make more money and sooner than they didn't use our solution. And for the people who didn't, they didn't care because they had a big outcome, and actually the emotional benefit and the recency and smoothness of the liquidity they would have achieved offset that. But to answer your question, part of what we want to solve here is that if there's some market force, whether it's a fund that raised too much money or whatever, is marking your business at a price that made your equity position worth $400,000, we believe you should be walking away with at least 5 or 10% of that. If you can't count on walking with 5 or 10% of that, the system is broken. And the system is supposed to be serving people better than it is serving them now. And if it's so funny money that you can't count on 5% of your paper value, then there needs to be a big reckoning. And there does need to be a big reckoning in VC because of TVPI and IRR data and DPI data and the real returns. And that's a different subject as well. We should be talking at some point. But this is what we're offering, which is the ability to make it into something. It's the same, these companies, if your dad had his entire, pension plan in Apple or Microsoft, that would have worked out really well in the past 10 years. You'd probably, go to your dad and be like, it's a really good company to it's like a lot of Microsoft you're holding. And maybe we should do something a little more balanced. And these companies are 100x more stable than the most promising startup in Israel, Wiz included. Fundamentally, people, if we can allow people to diversify those options a little bit, they'll start to really respect and appreciate the economic value of them more. And more importantly, they'll start to get economic value out of them more reliably, more regularly. And actually, one of the products that we're going to be releasing in the future is, if let's pretend you're at a tier one startup. It's one thing to be able to issue options to a new VP R&D. But imagine now you have a consortium of other companies that like a syndicate you've created together. And so now instead of issuing, $500,000 of Cloudinary options, you're going to issue 100,000. You're going to issue, 250,000 of Cloudinary, and then 150 or $200,000 of HiBob and Optibus, and just name other great late stage Israeli companies. And that's going to be much more interesting in terms of employee retention and in terms of realizing benefit and in terms of attracting folks as well. And so having these sort of B2B solutions where we can treat the option issuance as almost like compute hosting, and then having this application layer on top, which is these diversified products that more regularly and reliably and peacefully realize gains, and potentially also, other fixed income or S&P 500 indexing products as well, then we can really change how option issuance in the entire industry looks and works as well on top of that. That's for a future time.
Yeah, I totally agree. And I really do believe that some type of reckoning is coming. And I think also, like you said before, the VC model in general has to change because to a certain degree it doesn't make sense. And we could talk about it at a different time. But I do think when it comes to this whole entire aspect of options and everything else, I do think things are going to change because at the end of the day, people, it's getting more expensive to live. There's inflation, there's everything else. And people are gonna realize that they'd rather have, more options. So I do believe that. It almost makes me want to come work for you. Like, it's this really, I want to come work for you. 'Cause I'm starting to really believe, I just bit the bug. I really, really hear and believe in what you're saying.
Thank you. Well, the best way I like to tell everyone that two things. Like, one is I like to tell people it's good that we're around because you're a lot wealthier. Because it used to be that all the stock and options and LP stakes and GP stakes, so we can do stuff with those as well, that you have were basically high value lottery tickets. And now they're currency. You can buy anything else in kind with them. More buying power is the definition of wealth. So that's good for everyone. The other thing I say is, we were getting a ton of referrals these days, but tell people about it, because when you tell people about it, it's not a cool marketing tool that's going to increase conversion by 14%. Not knocking those, that's great. But this mathematically will protect families and lead to higher utility and outcomes, which is exactly what you want in a socially positive product. It's going to get rid of the bad risk and keep the good risk. And so the way that people can be part of this mission is by normalizing and taking it to folks, telling founders, you should think about this. You don't need to use it now. You may not use it for 4 years, but you should be aware of this option for protecting and growing your wealth. And in the same way that index funds probably sounded very strange 100 years ago, and now it's just the normalized way of investing, we're going to create a world in which you raise a round, everyone goes and Aptions 2 or 5% or 7% of their securities, and they continue betting big on their business, but they do everything in moderation and balance, which we know that in all things besides, anger and humility are important to always have. And so and so whether it's kind of the founders that you work with at accelerators or funds, or what's really saying, one of our investors who a socially positive leader is going to his founders and saying to them, I'm going to give you the opportunity to take 5 or 10 or 15% of your vested and put it with other companies within our fund. And that's not just going to be on the right side of history, because this is about, standing for working families, not against them, normalizing this. And it's not just about creating alignment in his portfolio. It's about just really just adding a lot of value to these folks who wanted to work with them when they're enabling them to change these $7 or $14 million paper stakes into things that are much more substantive. And so that is the best way that we can have everyone working for us, which is just pushing this idea around. And we're never going to push anyone to close. I'm not a very good salesperson, but getting people to just realize that there's an alternative to taking risk, heavy levels of risk in which you're not compensated adequately for it, in which it doesn't really serve you very well, versus a more balanced approach.
Right. No, I the best salespeople are obviously people who really believe in it and talk about it, then share with others.
I'm good at top of funnel. It was a lot easier to sell when I was attached to this fund with hundreds of millions of dollars, and the founders need to be like a sycophant towards me and to get the money. It's a lot easier to sell when you're trying to give money away to people. When you're actually having them try to give some of their company into your product, and we're taking a teeny tiny take rate on that, it's hard to sell. But anyways, that's what we have my fantastic co-founder Avi for, who's been a revenue leader for a long time at a bunch of different software companies, all better than this.
Amazing. You're not very active on social media. If we look at any of the platforms, social media platforms, you're not very active. Is that by choice?
I'm a pretty introverted person, and the whole sound bites and being loud for me, it's rational, because it's like this free game you can play with outsized upside and impact is maybe a good game to play. I think that we're going to be doing more thought pieces and content pieces. I think that I probably should be doing more, and probably will eventually. We have a lot to say on the current state of the VC ecosystem, the tech ecosystem, on a lot of things going on there, and we think that that needs to be put out there for the benefit of the whole ecosystem as well, and for the benefit of our company. So we'll be putting more stuff out on our website and things as well, and we think that we have some things to say that are data driven and really novel and interesting. But it's not if it's deliberate, it's not thoughtfully deliberate.
No, but I mean you personally, not necessarily on the company perspective, but you personally.
Yeah, it's it hasn't come natural to me. I'm a lot, kind of the 1 and 2 sentences, like put one-liner and sort of things. I should be doing it, but I don't know. It's just not how I like to communicate, interact. It hasn't come naturally. I don't have a good reason. I I don't know, like all the grandstanding and all the loudness is just, there's something, if I was a little bit more mature and objective, I would just understand that it's a good way to do and grow business. But I don't know, it's always been something. Is that not that everyone on Twitter is grandstanding at all? No, no, but I don't know. Call it introversion, call it whatever. I should do more.
Obviously, you have to do what works for you. And, it's always the people that usually are not posting, always the people that are really going ahead and accomplishing and doing things. The people that are making the most noise are usually, that's all the smoke and screen for them, for people to really look behind the curtain. That's what I always find like that. But wow, Aaron, I've been really enjoying this. And I like you're very an analytical thinker, and you think through stuff very, very thoroughly. And so I'm sure you have, based on how you look at business and how you think about it, I'm sure you also have, and we spoke and we touched upon it briefly in the beginning, certain life principles and frameworks that guide your life. So I wanted you to touch upon, perhaps one or two of your bigger principles and the framework of how you think about them that guide some aspects of your day-to-day life that we can learn from.
I've never verbalized to myself any motto that or mantra that has stuck with me in that sense. I think that I try to follow all the rules of the Torah to the best of my ability, and that's a nuanced, balanced path that composes a bunch of personal practice and interpersonal stuff. And even just to be able to follow that would be a blessing, to be able to rise to the challenge and the ask of such a standard. I think that ultimately, one should be kind and sensitive to others and live authentically. And I think that if one doesn't, I think that in order to live authentically, it's usually going to involve having to think about things thoroughly, and it's usually going to involve doing things a little differently than others, not for the sake of being different, because there's a lot of pressure to do things in a certain way, and it's hard to do sometimes. And I just say that it's I think the discomfort of compromising on one's ideals for the sake of conforming, I think long term is a lot more uncomfortable than just living in a more controlled but unfettered and authentic way. So I can't say that there's any guiding mantra, but I think that I'll say this. Growing up in the Midwest, I've always been, people make things very complicated, and I just think that it'd be really just being someone who doesn't have errors and doesn't act aggressively to others without a very good reason is a really good way to live. And I would just encourage, in the business world, there's a lot of pressure to do otherwise, and to compete, and then envy, and to put people on edge unnecessarily. And I think that Israel and the world and the business world just needs more people who are just going to be tough but nice, and just not make people uncomfortable unnecessarily. And if there's any one mantra, what Hill said, come over to love your fellow like yourself. Everything else is commentary. And ultimately, what does it mean to love your fellow like yourself? To treat people with the sensitivity you wish to be treated with, not to be the recipient of aggression or dishonesty. It's not just a touchy-feely love. It's just how you would want others to interact with you, and ideally. And I think that for anyone who has that sensitivity towards others, just to keep it and bear with it as they trek through the often on the surface, on its sort of bloody and brutal world of business is a big gift to everyone around them. And I mean, try to be, don't finish last, but be as nice of a guy as possible.
I love that. I absolutely love that. And I think that's an incredible closing note. Do as unto others as you wish you'd done to yourself. Love your fellow as you love yourself. I love that. And before we close out, any imparting words or wisdom you'd like to give over?
I don't think I'm wise enough to give over any words of wisdom. I would say that I would just say that um, there's a huge amount of luck that goes into both success and failure. Um, that the ability to be happy in the moment and present mind is a huge gift. The gift of health and those things, the ability to appreciate it, and and I would say and I would also just say is for anyone considering spiritual and religious paths. I can't speak for other movements quite as much as Judaism. That the depth and grandeur and quality with a capital Q, like the kind of Zen art motorcycle name is like the aesthetic overarching spiritual quality is very very rich and plentiful indeed, and it's a worthwhile exploration to the extent that one feels the urge to grow and build on their own spiritual life in any way. I'm not very preachy, but there's this quality of substance that lurks beneath the surface, though I'm not a master of it by any means. So I would just give that word of encouragement to those who are explorers seeking truth, meaning, and grounding in a really weird and increasingly weirder and unfettered world.
Amazing. Aaron, I want to thank you. I thoroughly enjoyed this conversation, and I know this is the first of many. Um, and, for all those that are looking to follow Aaron, go ahead and follow him on LinkedIn. We'll post everything in the show notes, and obviously go on to Aption and to check them out, see what they're up to, and see what you could do for them, and to make sure to share the message. But I have thoroughly learned a lot, and we'll talk about this later, what I've learned. But there's obviously I believe there's many things that people are going to listen to this conversation and be able to take and apply to their own personal life. So thank you so much.
Pleasure. Thanks for having me. Thanks for the time. It's been so nice getting to build a relationship. I'm looking forward to this being one of many, hopefully, happy interactions for a while to come.
Amen.